Yesterday, Tesla released its second quarter earnings for 2019, and in what has now become something of a tradition, we've spent a few hours sifting through the information presented by the automaker in order to bring you the CliffsNote version. So without much further ado, let's get on with it. The biggest headline, as usual with any Tesla quarterly earnings call, is the amount of money it did or didn't make during the quarter. And while Tesla did break its own delivery and sales records, more on that in a second, the company made a larger than expected loss in the quarter, causing shares to fall sharply at the start of trading today. Let's deal with the financials first. With $6.35 billion in revenue for the quarter, a little smaller than what Wall Street was expecting, Tesla's total unadjusted loss totaled $408 million, or $2.31 per share. Factor in all of the applicable adjustments, and Tesla's adjusted loss sat at $198 million, or $1.12 per share. Prior to the release of its financials, and one of the reasons Wall Street reacted so negatively to the earnings, analysts were predicting an adjusted loss of just 40 cents. Often, Tesla manages to beat Wall Street's expectations on earnings or on revenue. This time, it failed to do that, and on top of this, Tesla's automotive gross margin, essentially the difference between how much it costs to make and sell a vehicle, taken away from the amount of money the thing was sold for, fell. This means that while Tesla made and sold more cars than ever before, the average profit it received from the sale of each vehicle fell when compared to previous quarters. As to the average Model 3 selling price, about $50,000 or equivalent, in case you were wondering. While Tesla's larger than expected losses aren't good for the company short term, Tesla said that part of those losses can be attributed to more than $117 million worth of restructuring costs. It also finished the second quarter with more than $5 billion in cash on hand, which is one of its largest cash on hand positions ever. Let's look at some of the other information gleaned from the earnings report and earnings call. First, production. During the quarter, Tesla produced just over 87,000 cars, which was a new record for the company, and managed to deliver an also record-breaking 95,200 vehicles. The disparity between those two figures, of course, is explained by all of the vehicles that were in transit at the end of the first quarter, which hadn't yet reached customers. Of course, those vehicles now delivered, just over 76,600 of them were Model 3s. With deliveries in multiple continents now, Model 3 is by far Tesla's best-selling model. While some markets, like the UK, are still in the early days of deliveries for Model 3, Tesla said Model 3 sales in the US, where the car has been available for several years now account for more than the sales figures of all of the Model 3's gasoline competitors combined. Let that sink in for a second. Alongside its losses and production headlines, there were some interesting snippets hidden in Tesla's earnings report and then revealed also during the quarterly earnings call afterwards. At the top of the list, perhaps, is the news that Tesla's Gigafactory 3 in Shanghai is doing rather well. The company released its first photographs of inside the facility and noted that construction is now at a point where manufacturing line equipment is now being installed. Tesla says it remained hopeful that it will be producing vehicles at Gigafactory 3, which it is interestingly now calling Gigafactory Shanghai, by the end of this year. The main focus of production? A stripped-down Chinese market version of Model 3, which will be, quote, a simplified, more cost-effective variant. Meanwhile, Tesla's shareholder letter details the progress being made on Model Y, stating that because of the similarities between it and Model 3, Tesla believes it can ready the Fremont production facility for Model Y production with a very low outlay. Initially, while Model 3 was once the car that Tesla seemingly targeted as its ticket to profitability, Tesla has almost pivoted towards Model Y, quoting that due to larger market size for SUVs as well as higher ASPs, we believe Model Y will be a more profitable product than the Model 3. During the earnings call, Musk stated that he believed Tesla was, quote, now at the point of self-funding, which means that despite the drop in gross automotive margins, Musk believes Tesla is on an upward trajectory. How you personally view this news will depend on how you view Tesla and Elon Musk as a whole, so I will leave interpretation to the individual here for want of avoiding accusations of being biased from either side. Looking forward with regard to investor days, Musk stated that Tesla will hold a battery investor day in around 6 months' time that will be very similar to the autopilot one held earlier this year. A powertrain investor day is apparently also planned. To autopilot, Tesla said that full self-driving will play an important part in the company's overall gross automotive margin, with the goal of offering full self-driving everywhere except the EU, where a piece of legislation will need to be changed before that's possible in the not-too-distant future. In terms of vehicle demand, Musk stated that he believes Tesla's Model 3 demand will eventually hit 750,000 vehicles per year, and predicted that Model Y demand will be around 1.25 million cars per year, with Model S and Model X having much lower demand. To support these vehicles, Tesla continues to invest in new service centres and expanding its supercharger network, as well as hone its parts and spares network to include a brand new distribution facility dedicated to getting parts where they're needed in a timely fashion, which we hope should solve some of the issues Tesla suffered in the past in this regard. But what was missing from the call and the letter was mention of the Tesla Semi and the Tesla Roadster. While both have been mentioned in previous quarterly updates and calls, they were both unusually absent from Tesla's most recent one. This could just mean Tesla has no updates to give, but it could also mean that Tesla has decided to focus elsewhere for now. And if I had my druthers, I think the Model Y seems the most likely candidate. As is usual for Tesla's quarterly earnings reports and calls, how you view all of this data will depend on your personal views of the company and of its products. I will note here that both those against Tesla and those who are pro-Tesla tend towards extreme interpretations of the facts in these letters, and when the reality is probably somewhere in between these two polar viewpoints. One final thing to note though, the departure of JB Straubel. Straubel joined Tesla back in 2003 and said Musk during the earnings call, quote, "If we hadn't had lunch in 2003, Tesla wouldn't exist, basically." Straubel, one of the few Tesla OG left, will be assuming a role as advisor to the company. Instead, given his pivotal role at the company, it's quite the shock to see him moving on, and he becomes the latest in a line of executives to leave said company. Some would say this is a harbinger of doom, but Straubel was eager to point out that his departure doesn't mean he's lost his love in or faith of Tesla. Well, that's it. Thanks for watching. Let us know if you liked it or didn't like it below. Scribble a comment, hit the notification bell, and if you'd like to support us as a channel to grow and make more videos, please do consider sending $1 or $2 our way every month through Patreon. You can buy us a coffee using Ko-fi, or you can visit our merch store and buy some swag. I'll be back soon with another episode, but until then,